Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about how corn prices showed basically no response after the WASDE report next Thursday. And despite the smaller crop, we've seen a pretty lackluster movement in corn prices. Now, we did see a couple of consumption categories fall in their projections and a large increase in Chinese corn ending stocks, and I'll discuss that a little bit more as we move through this presentation. But overall, corn prices are showing no movement to what was sort of a positive WASDE report. So one of the big numbers coming out of the USDA reports on November 8th was the yield in corn went down 1.8 bushels per acre nationally. We saw out in the northwestern corn belt, Iowa, Minnesota, South Dakota, they all lost 6 to 7 bushels an acre. And we saw some strength in the eastern corn belt with Ohio, Michigan, and Indiana either maintaining or increasing their yield. And the last few times where we've seen this kind of yield drop between October and November, the final yield has ended up being lower than the November projection. And by my calculations, about 1.6 bushels an acre lower over the last 20 years. So there is the potential for an even lower yield as we move into the January crop production report. But right now, it was an overall positive sign that we lost some yield based on the year after year large crops we've seen in corn. One of the somewhat negative pieces of information that came out of the reports on Thursday was the Chinese ended up revising their corn stocks production and use over the last 10 years. And what this graph is showing is just how large the new stock estimates are for China. In 1819, they've got about 6 billion more bushels of stock supposedly. I don't know whether to believe them. I don't know what the quality is of these stocks, but I guess we're going to have to take them at their word. But all in all, they don't export corn. So if we're thinking about global demand for corn and U.S. corn exports, while this Chinese stock number is large, I don't think it'll affect overall global demand for U.S. corn exports. The USDA lowered corn exports for the 18-19 marketing year by 25 million bushels to 2.45 billion bushels. We've seen really strong corn exports through the second half of last marketing year and through September. You can see it's about 207 million bushels, well above last year's total. We've seen some weakness in export inspections through the middle of October, but as of the 9th week of this marketing year, we're still about 170 million bushels above last year. I think there's going to be strength in corn exports, especially at these prices, as we move through the 18-19 marketing year, and I think we're on track to hit USDA's current projection. The USDA maintained corn use for ethanol production at 5.65 billion bushels in the 18-19 marketing year in the recent WASDE report. And thus far in the marketing year, we're on track to hit that number when we see ethanol production through the first week of November and the kind of exports we saw in September, and ethanol slightly up from last year. One of the key things is, will we see gasoline demand? EIA's basically got gasoline consumption in 2019 flat, just a slight increase. But over the last couple months, we've seen a weakness in gasoline demand as shown on this chart. It's below last year's demand levels, and I think this is something to pay attention to as we move into 2019, because if gasoline demand isn't at least on par with last year, it's going to affect how much corn's used for ethanol, unless we see a boom in ethanol exports, which I think we'll see strong ethanol exports, but I'm not sure we're going to see a massive expansion over last year's 1.6 plus billion gallons. We could see ethanol use at basically levels we saw in the 2017-18 marketing year. So that's something to pay attention to as we move forward. The other use category that saw a reduction was in feed and residual use for the 18-19 marketing year. It was lowered 50 million bushels to 5.5 billion bushels, and we may see this continue after we get the December 1st stocks reports. The disappointing feed and residual use from last year, I think, is still carrying through as we see more use of distillers' grains and shifts in rations and ration efficiency overall. Overall, with the drop in yield, we saw a really lackluster response in corn prices. It looks like the bearish nature of the soybean market, the potential for acreage shifts in 2019 is going to hang over the corn price as we move into 2019. But having said that, the potential for lower yields as we move forward and continued strong consumption, I think, holds promise for corn prices moving up as we move into 2019. I'd like to thank you for your time. You can find my weekly outlook and issues related to Corn Belt farm economics at farm.daily.illinois.edu.